Hello, everyone. Over the past several trading sessions, Datavault AI ticker symbol DVLT has suddenly become one of the most talked about small-cap AI plays in the market. The stock's rapid movement has sparked curiosity among traders and long-term investors who are trying to understand what exactly is driving this surge in sentiment for a company that has mostly operated outside the mainstream spotlight. For months, DVLT's share price had been steadily drifting downward, leaving many investors doubtful about its near-term prospects. But in a dramatic reversal, the company has delivered a stunning comeback, posting a 90-day return exceeding 250%. This kind of leap is impossible to ignore. Still, when you zoom out and look at the broader timeline, the picture becomes more complex. The year-to-date performance remains in negative territory, and the stock's one-year return is also underwater. What this tells us is that DVLT is not just a comeback story. It's a story of intense volatility, high risk, and equally high potential reward. This swing in momentum naturally triggers an important question for investors. Is this the moment where Datavault AI becomes a true value opportunity, or is the market simply pricing in all the future optimism at once? In other words, is this rally a sign of what's coming, or is it the peak of expectations? Many analysts and valuation models point toward a fair value estimate of around $3 per share, significantly higher than the recent closing price of 1.63. This gap suggests the possibility of more upside, but only if Datavault AI can deliver the ambitious growth its supporters are banking on. The entire valuation argument hinges on bold revenue projections, rapid scaling, and the successful execution of strategic shifts that could reshape the company's trajectory. One major element feeding into this bullish outlook is Datavault AI's strengthened relationship with IBM. Achieving platinum partner status and integrating IBM's Watsonx.ai framework gives Datavault access to scalable AI tools, enterprise-grade cybersecurity, and advanced data management capabilities. These integrations are more than just buzzwords. They can directly impact the company's cost structure, improving operational efficiency and potentially widening net margins as the business scales. For a company aiming to expand in the enterprise data monetization and digital credentialing space, alignment with a tech giant like IBM is a significant advantage. But the real fuel behind DVLT's recent valuation excitement comes from its aggressive, forward-looking revenue targets. Supporters of the stock argue that Datavault AI is positioning itself for a level of growth typically reserved for breakout tech names. High earnings multiples are only justified when a company can deliver substantial, reliable expansion, and DVLT is trying to make the case that it can. The market is reacting not only to what Datavault AI is today, but to what it claims it will become in the near future. Of course, this story isn't without risks. A large portion of Datavault's projected revenue has not yet been recognized, meaning the company must execute flawlessly to convert those expectations into actual financial results. On top of that, integrating newly acquired businesses is always a challenge. Even industry leaders stumble with mergers when systems, teams, or technologies fail to align smoothly. Any missteps in these areas could quickly erase current momentum and damage the long-term thesis investors are trying to build. In short, Datavault AI has re-entered the spotlight with impressive force. The stock's recent performance hints at growing confidence in the company's direction, but its long-term success will depend heavily on whether it can transform ambitious plans into measurable results. Investors now find themselves watching closely. Is DVLT gearing up for a sustained breakout, or is this powerful rally simply a brief spark in a volatile journey? This is not financial advice.